1% down on a mortgage where you get a 2% grant that's free money. Is it too good to be true? Pros, cons, good, bad, ugly. In this video, I'm going to get into it. Stay tuned. All right, Matt, the mortgage guy, residential mortgage broker, powered by U Mortgage, greatmortgagebroker.com. If you want to connect me and my team, we're licensed in 48 states. This 1% down program launched back in April, but there's been some exciting changes even since I recorded the first videos I did on it, which is going to help expand it to more home buyers. So I'll give you the gist of it and the pros, the cons, the good, the bad, the ugly, as I always do, right? Because there's going to be some drawbacks. First and foremost, there's way more pros. And the biggest pro, in my opinion, that this is a true grant where it's structured just like a 3% down conventional loan that most lenders are going to be able to do for folks low to moderate income. Home Ready and Home Possible are the names for the Fannie Mae and Freddie Mac products, but that doesn't really matter to you. What matters to you is that the same interest rate, mortgage insurance payment, and everything associated with that 3% down program, as if you put your own 3% down, is going to be what you will get by only putting 1% of your own money down and getting 2% from the lender. So there's not like other programs out there, a higher interest rate, higher fees associated with it. This is a true 2% grant that you never have to pay back. There's no second mortgage. It's just 2% from the lender, 1% from you. It's a 3% down conventional mortgage. Now, here's the stipulations. Here's what some would say is cons. You're only allowed to use this program if you make 80% or less of the area median income. I'm going to post some links down below. If you go to Google and look up AMI lookup tool, Fannie Mae, AMI stands for area median income, you're going to come across a website they have where you can type in an address, you can type in a zip code, you can type in a city, and you can find the area median income to see if you qualify. Now, in California, where I'm at, Sacramento, area median income is about $102,000. So you're going to have to make $81,920 or less per year to be able to qualify. There's going to be other high balance counties in California where 80% of the AMI is all the way up to $133,280 per year and still qualify. And some of the lower price counties where you're going to find homes for lower, but also have a lower area median income, like Fresno, California, 72,900 is the AMI. So 80% of that being 58,320 is going to be the income limit for this program. You want to talk to a loan professional. You want to see if you personally qualify, but that's what you're going to have to qualify for from an income perspective. And so it's going to operate like any other 3% down conventional loan, where 97% is going to be financed from the lender. They're going to give you the 2% grant. You're going to put 1% down. So just to run through a quick scenario for you, you buy a $200,000 home with 3% down, and there's a $194,000 loan associated with that. $2,000 of that down payment comes from you. $4,000 of that down payment comes from the lender as a grant, forgivable, free money. And then $194,000 is financed. Don't forget that there's going to be closing costs associated. There might be points for the interest rate. There might be an underwriting fee. There might be a processing fee, title fees, prepaying taxes and insurance, prepaying a 15 days of interest, depending on when the loan closes. There's going to be other stuff involved. So you're not going to come out of pocket $2,000 and be able to utilize this program. You're going to either get some seller credits to help cover those costs, or you're going to come out of pocket $6,000, $8,000, $10,000, depending again on the different costs associated, a lot of them being third-party costs that aren't controlled by the lender. So look into it. If you think you qualify, it's going to help some, not all. It's going to be a great product in some markets, not all. The good news for consumers is that after the #1 lender in the country, United Wholesale Mortgage, rolled this out, you started to see some others who wanted to follow roll it out as well. So when big lenders compete, you, the consumer, win, which I think is a great thing. So 1% down, conventional. All in all, there's no real con unless you don't qualify, unless you make too much. And then, hard to think of that as a con, right? Is that you make too much to qualify for a program. That's a good thing. That's what I remind people. Any questions, please feel free to reach out. Leave comments down below. GreatMortgageBroker.com is how you connect with me and my team. If you want to connect with an agent in your area who's going to be able to find you something great, go to homeandmoney.com/Matt. If it's in California, I've got agents I can connect you with. So just come straight to us. GreatMortgageBroker.com. Talk to you soon.